Hello, investors. Taking clue from the quarterly results. In Q2 FY25, as indicated earlier, we have seen pressure on the top line growth as well as on the margin for most of the companies. Just taking clue from the sector-wise exposure. In the BFSI segment, we have seen credit costs building up for most of the banks because of the exposure towards unsecured lending. The NIMs have also remained under pressure because of the competitive intensity. That has also put some pressure on the headline growth. Going forward, we expect that credit costs will bottom out. However, the headline growth might remain moderate because the unsecured lending is drying up. As far as we are concerned, we have taken a cautious view and we don't have any exposure towards any unsecured lenders and remain cautious in the secured segment. In general insurance segment, overall demand remained tepid because of the overall demand in the auto sector is going down. However, for the health segment, the demand was good, and Sahis have reported better growth numbers. In the life insurance segment, most of the players have reported good growth numbers in the terms of 20 to 25% during the quarter. However, they have seen some pressure on their VNB margin, largely because of the commission rates going up. However, we remain constructive on this sector as we feel that the long-term tailwinds are strong in this sector and the valuations and in the current market are attractive. In automobile sector, PVs and CVs have witnessed pressure in terms of top line growth as well as bottom line growth. However, two-wheelers have remained positive in first half of the year. Going forward, we see some recovery in CVs and PVs as well as two-wheelers to remain strong because of the rural recovery. In auto ancillaries, the companies which are exposed to the export markets have witnessed some pressure. However, we remain constructive on this space where we feel that bill of materials with OEMs is increasing. In capital goods segment, although government capex has remained slow in first half of the year, the sectors such as T&D, renewable energy, and data centers have witnessed a growth. However, for EPC players, the order book buildup was very slow. As in second half of the year, we expect government capex to pick up. These players are likely to build up on the order book as well as the execution is likely to pick up. Exports remained tepid during the H1. However, there are some green shoots seen on that segment. We remain cautious on this sector because we feel valuations in this sector run ahead of time, and therefore we are avoiding any incremental exposure. In information technology sector, most of the managements have given cautious commentary on the discretionary spending. The discretionary spend in the developed market remains tepid. However, there are some green shoots as far as BFSI segment is concerned. There we are seeing some build-up in the TCVs. Overall, going forward, as US elections are over, we expect some recovery in this segment. However, margins are likely to remain subdued because of the furloughs in Q3 FY25. In healthcare segment, companies have reported good growth in chronic segment. However, acute remains under pressure. Margins have seen good growth because of the raw material prices being lower. In US, overall generic space has witnessed some price erosion in mid-single digit number. However, for CDMO and CMO space, overall pipeline remains strong because of the implementation of the Biosecure Act. We remain constructive on this segment and we are building a position wherever we find the valuations are attractive. Overall, we remain cautious on the market. In H2FY25, although we see some recovery from the current level due to consumption picking up and the capex improving, however, as the base for H2FY24 is high, overall growth number we expect to remain tepid. Valuations in most of the pockets remain high. Therefore, we remain cautious on the market. We hold adequate cash levels in our portfolio, which we will deploy at the lower level, wherever we see sustainable growth and the attractive valuations. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.